This recording, there we go. We started it. All right. Oh, we started for a while. So, let's describe bear market structures. So, for bear market structures for Bitcoin, we are sort of seeing that right now. One thing I'm also going to say is that we are also at generational tops for gold and oil. I do think that we are towards a top stage, as you can see. These pin bars, these rejections are not bullish at all. So that's one thing that I have to say is that the commodities are very bearish. Let's go to a more cleaner chart. I got a bunch of different Bitcoin USD charts, and we're going to talk about different bear market cycles. So as you can see right here, we got this first. And let's actually go to more of BLX. Let's go to BLX right here. BLX right here. So let's talk about, and we're going to go into the weekly time frame to discuss about how these sort of bear market structures have played out in the past. Let's go to first the 2014 bear market, and let's go more towards the 2018 bear market, and we'll talk about the bear market we're currently in right now. So as you can see, what the first drop does is that the first drop is towards a 20, and then looks like this one we got to bounce off of it. We create a lower high, and then this one, when we drop below the 20-week moving average, we bounced off of the 50-week. So if you look right here, we got to bounce off of the 50-week, and then we got a rejection right here. We got a rejection right here. We got a little altcoin season peak right here, and then we dropped below the 50-week moving average, and we dropped below as the 50-week was coming up towards the 20-week. So we dropped below the 50-week as the 50-week moving average support band, or the 20-week simple moving average support band is crossing over the 50-week moving average support band. So as it was crossing there, we got a dump below that. And then if you look right here, this is the 100-week, and maybe, do I only have the simple moving average right now? Maybe I should add with my indicators, though, 100 weekly EMA, so I can see it as more of a band, because I don't really like looking at one simple line in terms of moving averages. I like to have EMAs as well, because if we look at EMAs, and then can we go all the way down to the, let's go right here, and let's change this to the 100-week EMA. So as you can see right here, geez, this is the 100-week, no, this is the 100-week EMA right there. So we need the 100-week SMA. So I don't know why sometimes these things are moving average, 100 weeks simple moving average, and let's make this a little bit of a darker blue. Yeah, let's make it like a blue like that. So as you can see, and let's actually change the color to the lighter blue, because yeah, there we go. So as you can see, we consolidated around the 100-week moving averages, the moving average support band, and we consolidated around that moving average support band for around about 10 weeks. So maybe around like a couple months of consolidation between the 100-week moving average support band and the 50-week moving average support band as these moving averages were crossing. What came next is that we got a capitulation dump towards the bottom. We got a capitulation dump towards the bottom right to the 200-week moving average support band. So what happened after that, after all this consolidation, a bunch of people are like, oh my goodness, it's consolidating much lower than when I bought it at. I give up. I'm down so much. And then a lot of people just give up, have some bad news. I think this might have been a taper tantrum back in 2014. But yeah, as you can see, towards the end of 2014, we had a capitulation dump down. If you look in terms of weeks, how long this bear market lasted for, This one from peak to trough lasted around 58 weeks, so a bit of a year plus a month. So a year plus maybe a couple months for this one from top to bottom. So it took around a year for this bear market structure to occur. So let's look at the next bear market structure. As you can see right here, we got similar bear market structure. We didn't get that. We get maybe like a little bounce up, but if you look right here, we got a drop below the 20-week moving average right here. So we got a drop below the 20-week moving average support band right to the 50-week moving average support band. We got our initial bounce from the 50-week moving average support band. This one, we actually got a couple bounces from there. But as you can see, we weren't able to properly hold above the 20-week moving average. But yeah, after the first bounce, when we got that little... when we got that dumperino below the 50-week moving average right here, we got the dump below the 50-week moving average, and we consolidated for around, how long was this consolidation for? Or we went absolutely nowhere. This one was around 23 weeks. So we went 23 weeks without going anywhere. We were kind of bouncing around $6,000, $7,000, $8,000 right here, right around the 100-week moving average. So right at around the 100-week moving average, between the 100 and the 50, we were consolidating as these moving averages were crossing over, So as we were consolidating between those, that's the bearish consolidation before we ended up dumping down towards the 200 weekly moving average support band. So right to the 200 weekly moving average support band right here. As you can see, it kind of follows some nice bearish structure. So where are we at now? This bear market structure is pretty interesting. So right here, we got a dump below the 20 moving average support band, and we found ourselves some support along the 50-week moving average support band. And then we got a dump or a spike up above. We kind of extended ourselves pretty high above the 20-week moving average support band. And as you can see, we got 2 bounces off that that support band right there. Couple bounces off of there. And then yeah, as you can see, we then dumped below the 50-week moving average support band, as you can see right here. So we got ourselves a new all-time high within bear market structure right here, as you can see. So we got ourselves the dump below the 50-week moving average. So we got ourselves the 20-week moving average dump, and then we got ourselves the 50-week moving average. This one we kind of hanged in there for a little bit while before we bounced up. And this one we actually put a new all-time high in, but it was a price discovery for ants. This was not a legit, it was a false breakout that we got this time. And then as soon as these moving averages were getting closer together, we dumped below the 50. So we dumped below the 50 right here, as you can see, and now we are in the consolidation phase. So the most likely case scenario, as you can see, these weekly candles are not bullish at all. We're getting some high rejects right here. Some reject. I need to learn how to use this. Reject. We're getting rejections from the 50s. So we're having the bearish consolidation right now, where, you know, yeah, we're holding above the 100-week moving average area, but we're not able to get above the 50 moving average area and the 20 moving average area. We can't get above this area of resistance right here. And really, to flip bullish again, we really need to get above these moving averages. We need to get above these moving averages right here to flip more bullish, because once when we did flip above those moving averages, like right here, as you can see, we had a nice move up. If you look right here as well, when we dumped here, our bull market started once when we got above those moving averages and decisively and held them as support. So we right now are consolidating along this 100-week moving average support band. We are in the consolidation phase, as you can see, and I have no clue how long this is going to be. Since we broke below, we've kind of been in the consolidation phase for around a around 10 weeks now. So we've been 10 weeks into here. If I were to speculate, I'd say that the next FOMC meeting will kind of decide if we capitulate or not. I think we might capitulate as a result of this FOMC meeting. But yeah, and it's very tough to tell how long it's going to be, and where the 20-week moving average or the 200-week moving average will be at when we get down towards there. But that's sort of what the structure suggests. And the invalidation is if we get above all of these moving averages. So if we get above the 20 and if we get above here, and it's not a false breakout, but let's say we move up decisively and extend a lot further than these moving averages, we can invalidate this scenario. And I got them more in texts right here. So I got some pretty good texts. I have them on my Twitter page right here. As you can see, I kind of got a nice little thing right here, but I kind of want to put into words sort of what we could be seeing. And where we bottom all depends on where it's at. But if I were to kind of speculate and sort of decide where, I think the bottom will likely be around, if this structure is still existent, I feel like the bottom will be more around a year from the recent top, and the recent top was in April. But a lot of the altcoin tops are also in May, so who knows? We could maybe bottom out in May instead. But yeah, it all depends on whatever. But yeah, right now that's sort of just my vocal explanation about bear market structures in Bitcoin. And yeah, it looks like we are playing out similar bear market structures right now. We'll see exactly how it plays out. Really, if we ever drop below the 50-week, it is not a bull market. I will say that 100%. I will say that it is not a bull market. We are not bullish while we're below the 50-week. It's very likely, more likely than not, that it's going to go towards that area. But if I were to end on this note, I'd say it's some of the greatest buying opportunities ever you could possibly get. Even right here. Even if you bought right here, like let's say you bought in the consolidation phase, it would take a little bit of patience to get back into the green. And even right here, we got the March 2020 dump. But though, it's all opportunities, because if you look at these bear market structures, they all recover very, very nicely. They all recover extremely nicely. And that's what I kind of want to end the note on, is that they're likely to recover in the long run. It's only a matter of time. But, this consolidation could last a while. This dumpage could take a little bit of time to recover, but it will recover nicely, and I think the patient will be rewarded. But that's all what I have to say for this Bitcoin graph. So yes, bye.